Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with James Smith. He's the founder of GannAnalysis.net. James has experience in the markets. He traded bonds at UBS. He worked for Reuters as a capital markets manager, and also filled the position of director of marketing at PEI. And throughout his career, James has held an abiding interest in Gann theory, and that's what we're going to talk about today. Before we start, I just wanted to say that James has been kind enough to provide the viewers with a 2-week free trial. If they find that they are interested in Gann analysis and if they enjoy this presentation, they'll be able to send James an email and tell him that you viewed this podcast, and he'll do you a deal for 2 weeks of free trial. James, thanks for coming on the channel. And I've looked at, I've heard about WD Gann, so maybe you can talk a little bit about WD Gann and who he was and what Gann analysis really is.
Well, thanks for having me on, Mario. I appreciate it. And this is an exciting time for gold. We'll get into that in a minute, but yeah, just to give your viewers some information about who was W.D. Gann. He was, by all accounts, the greatest technical analyst who ever lived. Now, some people would dispute that. They would say, you know, there are other choices, but I mean, when I've looked at Elliott wave, I've looked at momentum indicators, I've looked at a whole range of things. Nothing actually stands up to Gann. So it's, once you get in, be aware that you'll probably get hooked. There's multiple levels to Gann, but W.D. Gann lived from 1878 to 1955. And he packed a lot in that 77 years. In fact, when he died, he left a trailer full of charts. And remember, back in the day, they did everything by hand. So there was just too much information for most people to digest. So there have been many, many books written about Gann, and he wrote a number of books himself. One of the famous one, Tunnel Through the Air. You know, he wrote a lot of books, and he did courses, and he traded. So the guy he's something special. I think there was a reporter back in early 1900s, 1909, something like that, where he sat and watched him trade about 280 trades, and 265 were winning trades, and that was over the course of a couple of days. So he made 10,000% in that short span of time. He just wanted to prove that his methodology worked. And so he only did that once, but the reality is it's just, I mean, it's over 90%. His, wins versus losses, and he made 10,000% over the course of a week or thereabouts. So it's truly amazing what he was able to do. And today we just want to give you a little flavor for what is Gann analysis by looking at gold and how the Gantt charts apply to gold. This is not going to be the be all and end all. I mean, once you get into it, you realize just how much there is to Gann. But what I've tried to do is simplify it for new clients so that they know that it's not going to be overwhelming. So, basically they'll be able to get at the crux of the information and be able to do a trade. You don't have to know Gann in order to appreciate these charts that I'm going to show you. So does that explain a little bit, or would you like to know more or about Gann or what?
Well, maybe what kind of analysis did he use? Or maybe you're going to tell us.
Okay,
go
yeah,
through the
it's
charts.
it is mainly looking at time and price as they relate to each other. Now, if you look at any chart, you'll see an X and a Y axis. And most technicians, not all, but most technicians only care about price. And what made Gann different from other chartists is he said, look, time is more important than price. So he always looked at cycles, and when when it was time to do something, he did a trade based on the time was right, as well as the price. So you analyze the two together, and you only take a trade when both time and price were in what he would say when they're in balance. So that's what we're going to get into today. I'm going to show you a few examples of that, but it'll make more sense once we look at the charts.
That's great. So I guess we can start then with the chart of gold.
Yeah, sure. So you can see the chart now, right?
Yeah.
Okay. I'm starting with a little history here on CPI going back to April of a year ago, not just this last April, but over a year ago. I was warning clients that inflation was going to be out of control. And if you recall, this was a time when Jay Powell and the Fed kept saying that inflation was transitory all last year. And I kept warning them that, this is building. And sure enough, it just kept getting, you notice in the last few months, the Fed is no longer using the word transitory. They're admitting that it's not transitory, but all last year, as inflation was rising, they kept saying transitory. And I noticed when I was looking at the chart, the blue line is gold, and the sort of brown line is the S&P. You see the divergence from January of 2021. It diverged quite a bit. Gold underperformed, but what I was suggesting to clients, there'll come a point where that will reverse itself. So reversion to the mean, if you will, the S&P goes down and gold goes up as a safe haven or as a hedge against inflation. So I think that's the interesting thing right now. I think we're close to that point where they're about to, we're going to see a continued slide in the S&P, and gold will start to go up. And part of it will be that the Fed is telling everyone that they're going to do QT, they're going to tighten, but I don't honestly believe it, because in the teeth of a major bear market with stocks going down, the Fed's going to continue to grow their balance sheet, even if they say otherwise. They may do the 50 basis points tomorrow. They've broadcast pretty loudly that they're going to raise rates by 50 basis points, but I'm more interested in the statement. I don't think that's. I'm looking for a dovish statement, or they're going to leave some flexibility in the statement so that they can wiggle out of the idea of tightening. So that's why I think gold is going to go up, if you want the sort of fundamental reason. And also, if you look at this chart, you can see that M2 has been growing vertically since the March 2020 low. It just went straight up, even as the S&P rebounded. If they had not done the hyper growth of M2, you would not have seen this big rally. So what I'm telling clients is, don't think of it as a stock market correction. Think of it as we're just the market's way of taking back what never should have happened in the first place. This was all stock market manipulation by the Fed, growing M2 at a rate that was unprecedented. You can go back as far as you like. It's never gone vertical like this. So even if you're not doing Gann, you would be looking at gold as a hedge against inflation, because asset inflation in the stock market, and M2 is eventually going to translate to higher prices for gold as a hedge. So I think that's an interesting chart. And even now they say that they're going to shrink the balance sheet, and I don't see any signs of that. But I think this is just going to keep growing, but maybe not as fast. But to the extent that they do QT, honestly, it would worsen the stock market correction.
The other thing I would say about M2 is that even if the growth rate comes off a bit, the pool of extra money in the system would still be growing more than it used to. It's like compounding, let's say $100,000 at 3%, and then you increase that pool of dollars to $1 million. And then you increase the rate of growth to like 6%, and then you decrease it to 3%, but you're still doing it over $1 million instead of 100,000. So they would need to really decelerate the growth of M2, I think, to stop inflation.
That's a good point. I honestly, I think they know they're in a box and there are no good choices, but we'll see what they do. I think it's interesting. Now, this is where the Gantt charts come into play. I mentioned time and price. And to explain this chart, I'll just briefly say we're fixing the low here back in October 2008. And then we fixed the high at September 2011. And then we project a square, this initial square, using a scale. In this case, we're using 10 points per month for that red line, as it declines at a rate of 10 points per month. And you can see it caught this high here. And when you broke out, then it started to move up. Now, for people who wonder, well, why do you need the scale? I would say to you, how many of you have ever drawn a trend line on a chart? And I would say almost all of you. And the only difference between a Gann line and a trend line is that the slope. We know that it's 10 points. Whereas the average chartist just draws a trend line connecting a series of higher lows or a series of lower highs. And when you break out one way or the other, then they take their cue from that. The same idea applies to Gantt charts. If you break out above an important Gann line, it's just like a trend line. You get a rally.
And what do you mean by this? How do you get the scale of 10 there for that?
Well, part of that is you have to look at a range of markets. Each market has its own vibration, and 10 is what works for this market, but that's on the monthly time frame. For the weekly or the daily, you would choose a different scale. And a lot of critiques, I don't know if you remember Market Wizards.
Yeah, I remember that.
I read both of his books and I thought, well, this guy's an interesting character. Let's see what he has to say about Gann. He devoted about 3 sentences to Gann. And he said, well, because you can change the scale, it's subjective. I thought, wow, this guy's a real knucklehead. He doesn't understand the whole concept with Gann is you're looking for the vibration. It's not subjective. It's like, how do you explain music to somebody who's never heard music? When it's right, but people are going to say, wow, it's subjective. Well, no, not really, because if you look at the circles, you see it's hitting 1/4 of the way through the square, halfway through the square low, 3/4 of the way through the square, a higher low, finding support on a 2x1 line, which is just twice the slope of the 1x1. So if this is 10 points per month, then this would be 20 points per month. So the way the square is drawn is that you take the high and you draw 10 points per month all the way down until you reach the level of the prior swing low, and that completes the square in time. And then the 2x1 would get there twice as fast. So it would terminate at halfway through the square. And then from there, it goes up. So everything about the square is derived from that initial scale of 10 points per month. And if you change that scale, you get different results. But if you play around with different markets, you find out what the right scale is. Because if you're not getting a lot of hits, like all these circles, then you've got the wrong scale. It's
So
not
the 10 points per month, is it the $10 lower for the gold price every month?
Yeah, the one drawn down from high would be $10 lower. So it would,
I see.
and actually I drew in this chart here. You can see from this high, it caught the high at 1793.7.
Yeah.
And then it would be 1783.7.
I see.
So it's really not that complicated. It looks a little bizarre when you first look at it and you think, well, what is this all about? But when you see all the hits, you know, the arrows here show you hits, it's actually hitting all over the place. And then what Gann said is the most important part of the square is halfway through the square, and then also the completion of the square in time. And sure enough, in February, we got the start of a big move up, and we got this initial boost, and then you got this head fake down. But notice you're finding support on a 2x1 here. So that's a good sign, both last month and this month. And actually the prior month, the low ticks were right on this line. Now, what you could say is, oh, you know, maybe I'm a little gun shy on gold. You could wait until it gets above the prior swing high at 1924, and then, you know, start to get aggressive. Because honestly, when you complete a square, the only thing that Gann tells you is that you're going to have a change in trend. And somebody could argue, well, I think the trend is going to be down. And I would argue that it's going to be up, but I'm basing that on not just this chart, but a whole range of other charts that I'm going to show you. So it's, you know, that's the complicated bit about Gann, is you can't just look at one chart and draw a conclusion. You got to look at, you know, I have like over 200 charts on gold. So, you know, I'm not going to show all those today, but I'm just saying that if you get into Gann, there's all kinds of things you can look at. And the reason I'm showing you this chart, it's something interesting in terms of, you know, the vibration of the market, because right here in February, it really started to move up, and then March, April, May. And I'm expecting it to start up again real soon. So let me show you another chart to show you why.
Could I ask one quick question?
Sure.
I guess this is a long-term view of gold.
Yeah.
You also do very short-term. Can you do very short-term analysis, I guess, with Gann as well, for like traders instead of investors?
Yeah, in fact, I do that with my clients. I give them very short-term signals. And for example, this chart is a little short-term, a little shorter than the monthly time frame. This is a weekly chart, and it gives you a little more precision. So what we do is we start with the highest time frame, the monthly chart, and then we work to the weekly and the daily, you know, and we even look at the hourly chart. So you do get signals on all those time frames, and when they line up, you have a better chance of a winning trade. So if you recall that February was the start of a rally on the monthly chart, and then on the weekly chart, it will tell us, hey, we just completed the second square. If this is the first square, then this is the second square in time, and we sold off into it. We're expecting, it's also finding support just not too far above the October 2012 high, which we used to create the square. So I think that's bullish. I'd like to see a low this week and a rally thereafter. That would be ideal. In fact, I think there may be a connection between this chart and, the Fed meeting this week. So maybe the Fed says something or does something to turn a few heads on gold. I don't know, but this chart doesn't tell me why. It just says, the time is right sometime this week for gold to bottom and turn higher. So that's what I'm looking for. Now, somebody might ask, well, what happens if you take out 1798 and you just keep going down next week? Well, then maybe this was the start of a serious move down. I don't believe that's going to happen, but with Gann, you always know where your stop loss is, because if you take out this support here at 1798, you may have to change your view on gold, because, hey, it's not doing what we thought it would do. So does that make sense?
Yeah.
Okay. Now, you asked about, okay, there's another concept here with Gann that I need to explain. From this low to this high is the big swing. And Gann's, one of his concepts is that you can divide any swing into 8 equal increments. So once you have that high, then you count down 1, 2, 3, and that would be a 3/8 retracement. The actual low here, 1849.83, the low was, let's see, I think it was about, I think it got down to 1849.
Well, today I think the low's been 1850.
Okay, so
on the spot price.
Yeah, so it's just it actually is what you look for with Gann. You want that positive bounce off of a retracement to tell you that, hey, maybe that's a low. And if you're wrong, you buy here at 1850 or 1853, whatever. You bought it this morning and you say, oh, okay, I think it's going to bounce back. Your stop loss would be right below it. So you're not risking a lot. So even if you're trading intraday, Gann is useful, because knowing this level is an important support for Gann. You're going to take your view based on how the market behaves in relationship to that line. And if it takes that out, maybe it will go to 1770. The 50% mark is an important retracement. And you can't rule that out. I mean, it's possible you could go down there, but I kind of think it's getting ready to go higher. So that's what I've been telling clients.
So that swing there is from the March 2020 low, right, to the high in the summer of 2020.
Yeah, it's March 2020 low. Yeah.
Okay.
So we took that low and then the August 2020 high. And, notice the 5/8 retracement gave you support, 50% mark gave you support, and now 3/8. So it's when you see enough of these charts, you realize that there is a kind of magic to it, because you think, well, why is this working? But
yeah, that's similar to the Fibonacci retracements, isn't it?
Exactly. If somebody's worked with Fibonacci, it's the same idea. So you see it work enough times and you become a believer in both Fibonacci and Gann, because, they're both useful.
And I guess that's got to do with, some people don't think nature is involved, but like you said, the market has a heartbeat, just like things in nature. And I've seen many times markets charts hold that, especially like they trade between the 50 and the 3/8 there, retrace them. Like if you look at this chart here from July 2021 to like the beginning of 2022, we were trading between those two retracements there, basically.
Yeah, you just bouncing back and forth, and then you got this huge thrust up, and something new was happening. But notice you come back and you get everyone excited up here. Oh, it's going to go to new highs. Whoops, not so much. And then, I think it's the more times you knock at the door, the more likely you're going to go through it. So I'm excited, because I think this was so calm, almost a double top.
Yeah.
And then you come back to the 3/8. you get everyone depressed and they think, oh my God, I'm never trading gold again. And then suddenly out of the blue, something happens. So that's the exciting thing with Gann. Let me show you one other chart that'll kind of blow people's minds. This is called the static square of 9. In order for you to understand these levels, these horizontal lines, I have to show you one other chart. Now, 360 degrees, this is called a 360-degree line. It's a cardinal level on the square of 9 at 1871. I honestly thought this would hold. It did here, but it took it out the other day, and I was a little surprised. But, you know, that's an important support level on the square of 9. You can see it was a high here. It was a high resistance here. But let me show you where that comes from. It sounds a little bizarre, but this is the square of 9, and 1871 is lined up with the spring equinox. So you have a time element. I'll just show you that. March 21st, March 20th, right in there. The spring equinox is lined up with 1871. Anything on this line is considered a 360-degree line. We start the year on the square of 9 from the spring equinox, and then we do 45 degrees. If you go 45 degrees, you would go from 1871, you go up here, over here to 1915. And that would be considered a 90-degree line, anything on this column, which is, if you think of north, south, east, west, this is north, and this would be west.
Yeah.
And so anything, if you were on the opposite side, that would be 180 degrees. So let's say you went to 1959, that would be 180 degrees from 1871. So you're just going around the circle. And let me back up and say, this is a little crazy. You can look up on the internet and find the formula, but it's very simple. You're rotating out and you complete the first circle, or the first square, if you like, with the number 9. And then you just keep going, and you keep going out to infinity. And the way this works, I'll just show you an example. It's easier to explain on this column. If you take the square root of 9, that's 3, and then add the number 2 to it, that would be 5, and square it, that would be 25.
Yeah.
You take the square root of 25, that's 5, add 2, that's 7, square it, that's 49.
49, yeah.
And it just goes on and on. Now you can do it on any of these, but they don't come up, you get fractions, whereas this line, you get whole numbers. So it's easier to explain it on this line. But that's what the formula is. And honestly, if you wanted to just do this on your own, you could. You have the formula, you can find out, well, what would be 180 degrees. You just take the number, take the square root, add 2, and that would take you, add 2, that would be 5, that would be take you to 25. That would be one 360-degree or one complete circle on the square of 9. So 360 degrees from 9 is 25. So that's how that works. I don't know if that makes sense.
Yeah, and is this something Gann used to use, WD Gann, or is this something?
Yeah, he did. He went to India, and there are a lot of cultures that have the square of 9, but the Hindu religion, mystics, and you're going, I've even heard they have it etched on in the concrete at the Vatican. I don't know why, but apparently they knew about it.
Yeah. So how does it work on the that chart then?
Okay, going back to the chart, what we call the static square of 9 is anything like 1871 would be a 360-degree line.
Yeah.
And 90 degrees would be 1915.
Yeah,
So if you go back here and you say, okay, where's 1915? Oh, it's 90 degrees from 1871.
I see.
So that's the start point. And then, you go around the circle and let me get 1959 would be 180 degrees. So if we go back, we see 1959 is a 180 degree line.
Oh, I
And
see.
so there's really nothing magic about it. It's just the reason it's called a static square of 9 is we're starting from the center of the Gann wheel, and we're only quoting those levels that fall in the north, south, east, west axis.
Oh, okay.
Those are all what Gann considered to be important cardinal levels. They're more important than some of these other numbers that you see between.
I see.
And they often offer exact support and resistance. And so it's not that they work every time, but you kind of keep an eye on them because sometimes they do hit precisely.
Yeah.
And where, Gann gets a little complicated is you're not looking at just the square of 9. You're going to look at divisions of the range. You looked at that 3/8 retracement and you say, oh, it bounced off of that. And, on the square of 9, you might see 1871. If you get back above that, you say, oh, well, it would have been nice if it had held it, but it went down to 1849 because of that 3/8 retracement. So, and then when you get back above 1871, okay, maybe we can start targeting 1915.
Oh, I see.
Or maybe you say, well, I don't think it'll go 90 degrees. I think it'll do 45 degrees. So maybe it'll go to 1893.
Okay.
So then you say, oh, okay, if I'm day trading or, swing trading, maybe I'm just going to be in it until you get to 1893. And I'll watch it and see what happens when you get there. If it shows strong resistance, maybe that's I'm out of there. I might get there and fall back to not to 1871. Maybe it falls back in between here somewhere.
Yeah.
And if it closes above, maybe I double up and make a bigger position and then target 1915. So, you can day trade with this. And there's another nuance to it that I didn't mention. If you have a cycle low, we're just using the static square of 9 here, but you can also fix on a particular low or a high and then do degrees of movement up from that low or down from a high. And so instead of just using what the square is set up for, north, south, east, west, you can look at 90 degrees from low or 180 degrees from low. You can look at those levels as well. So if it's a market you're trading actively, you'd probably do that. I haven't done it on this one just for display purposes, but I did want to add that comment because that would be called the dynamic square of 9, where we're fixing a low or a high and we're saying, oh, okay, what would make sense? And also the price unit is the scale. I didn't mention that, but if you can use 1, it's better. Some markets like currencies, you're not going to be able to use 1. You're going to have to use 0.001 or, something. The scale of the square of 9 is set up for 1, but you can, with computers, you can change this scale if you want to something, bigger, 10, or this won't make sense here. You see that it just, but if you were looking at currencies, it would make more sense.
All right.
So it works on all markets. It's just, you have to know the scale for that market. Now, one other thing I would like to get into is, it's a cumulative basis that we form our opinion, and sometimes we get it wrong. But even if you're day trading, it's good to look at these long-term charts. Every December, you get a hit, a low, right? It's like clockwork. and then you break out above a simple trend line and you say, well, this thing is going up. So at that point you say, oh, okay, I'm only going to consider trades from the long end. I'm not going to go short because I see this breakout. I know this is a reliable pattern. We could get a big run up like we got here. Why would I get out now? Maybe I'm just going to wait for a pullback and then get long. And then we say, oh, you bounced off the 3/8 retracement at 1849. And you combine that knowledge with the knowledge of this chart and you say, hey, maybe I've got a reason to get long because this pullback, I don't think is going to last because I think this was the start of a big move up.
I see.
Yeah. And then, of course, going back to the chart I showed you before, on the monthly time frame, we have good reason to expect a huge rally because this is a very long-term chart. So even though you might be day trading or you might be swing trading, it doesn't mean you can't look at long-term charts because they are the background. You want to stay with the trend. You don't want to trade against the trend. If you didn't get in and you say, well, I missed the rally. Well, maybe you didn't. Maybe you just have to wait for a pullback and you bounce off that 3/8 retracement. And you know that this is a longer term chart, but it's telling you it's going to go up. So we like to take advantage of that. So does that make sense?
Yeah, I guess the low from the low here, this one.
Yeah, 1849.7.
Yeah, that was is that December 2020? So are you saying that there's usually a low in December? And
well, the low here, the low here in December is my focal point because I'm saying that combined with price, the breakout above the trend line is reason to get long.
Yeah. And you're also saying that in previous Decembers, we had lows as well, right?
Right. So it's a high probability trade.
Yeah.
Eventually it won't work. But the reason I liked it this time is because you broke out above a downtrend line.
That's right.
So, the way Gann traded now, he would probably use a Gann line, but I just drew a simple trend line.
Yeah.
And, you're looking at that breakout and the cycle told you this was a low. When you break out, you have confirmation. Yeah, this is definitely a low.
Yeah. Some people argue that sometimes after the breakout, we can retest like the line as well. So I guess we could go a little lower there.
Sure.
Retest that line.
Yeah. In fact, I mentioned before, I think one of the Gann levels was a 50% retracement at 1770.
Yeah.
And so could you get down there? I suppose, if this thing drifts down all the way to maybe it retests it over here in July, you can't rule that out.
Yeah.
But, if it's going to continue down, maybe it finds support on this trend line before it goes higher again.
Yeah, that's right. Yeah.
So you can make that argument. And I guess what I'm saying to clients is I'm not basing all my analysis on this chart. I'm looking at other charts. And let's see. Here's a simple idea, the golden cross. Now, this is not Gann, but I still like to look at it. And you did get an initial spike move up as you got the 50-day moving average crossing above the 200-day moving average. So that was a buy signal in addition to that breakout above the trend line. So you have multiple reasons for going long at this point. Now, it's unfortunate that it didn't find support it did initially, but it took out the 50-day. Maybe it goes down to the 200-day at 1834 before it goes up again. But I guess I'm sort of halfway thinking the time is right for it to bottom this week. And if it doesn't get there in the next few days, I'm going with the idea that 3/8 retracement at 1849 probably gave you the low for this near-term pullback. But I can't rule out a test of 1834. If something happens tomorrow with the Fed and he gets hyper, maybe he's going to stand his ground and raise rates by 50 or 75 basis points and shock the market and say, we're just going to do whatever it takes. You know, somebody could argue, you never know how the market will respond, but I kind of think, you know, maybe there's a chance you could go lower for gold sometime this week. But that's why sometimes you just have to wait until the cycle comes due. And with that in mind, that's what I'm keen right now on May 6th, which would be this Friday. And this is kind of hard for a lot of people to swallow, but Gann said that there's seasonality to all markets, not just corn, wheat, and soybeans and, you know, agriculture, but to even gold. And you can see it on the charts. If you look at enough charts, you can see mid-season turn, the dotted line here gave you a high. I'm saying the mid-season turn halfway between the spring equinox and the summer solstice is May 6th. And, you know, if you do the number, if you think about it, the seasons are all roughly 90 days apart. So again, that plays into Gann's cycle of a 90-day cycle. And then a 45-day cycle would be, you know, from the spring equinox to the mid-season turn would be 45 days. So that's an important turn for Gann. And if you sell off into it, you're probably going to rally coming out of it. So that's where I go with that. I kind of warn people, oh, yeah, maybe gold could go down to 1838. Maybe it tests the 200-day moving average. Maybe it goes all the way down to 1770. But if you get to Friday and it's starting to move up, you don't have to catch the exact low. Sometimes it makes more sense to wait for the market to prove that you're right. And, you know, so maybe instead of buying it at 1867, maybe you wait for it to get above, I don't know, 1893, square of 9 level. And you say, well, okay, now I'll go long because it looks like, okay, today's Friday, May 6th, and we're starting to move up. And oh my God, it looks like this is a turn for real because it's happening on rising volume. And the time is right for it to move up.
Before, sorry, when we spoke before you came on these last few days, you told me about the, I think it was April 29th as well, that was an important day.
In fact, April, last week, I had a bunch of cycles due. And this is kind of annoying. It just goes to prove that, you know, nothing's perfect, including Gann. What I like to say, these are important Gann numbers. You know, 144 bars would be trading days, 180 trading days, 432 is just 3 times 144.
Mm-hmm.
So if you start, you anchor from the high of August 7th, incidentally, that's a mid-season turn or close to it. And then you count down 144 trading days, you get a low, and then you get a low 144. And then I was expecting a low last week. So
I see.
It just shows you can't get it right every time.
It's like the weather and the season. Sometimes you get a really cold day in the spring with snow and nothing's perfect.
It's a freak accident. It happens. You say, well, it should not be snowing, but it is. And this gold should not have gone down, but sometimes it does, you know? So that's why you have to trade with a stop loss because, you know, even with Gann, you're not going to get it right every time. But I like these cycles, 60 trading days from this low. That's another Gann cycle. There are a lot of fixed Gann cycles that we use. And when they cluster, when you get a bunch of them, we have a higher probability of a change in trend. So the fact that we sold off into it, I was excited last week. I thought, oh, okay, we're probably going to form a low at 1871 and then go up or, you know, but we didn't. We just kept going down to 1850. So that
Where
happens.
do you get the 144 number?
144 for Gann. You know, I should have mentioned this before, but he was raised in a very devout Christian family in, Texas. And, you can imagine this was the late 1800s when he grew up, and he memorized the Bible. And not too many people do that. He did. And he actually took a lot of his counts from the Bible. Now, he did look at pyramids. He looked at square of 9 from India, and he looked at all kinds of things, but he didn't restrict himself to the Bible. But, like 12 tribes of Israel, 12 times 12 is 144.
Yeah. Baker's, 12 months to the year, I guess, as well. 12 is an
months
important
to a
number,
year.
isn't it?
Exactly. And so, he got into all kinds of things, the planets, as well as all this. If you really dig into Gann, I mean, it just never ends.
And I guess he found patterns in these numbers.
He found patterns. And so when you call something a Gann number, it means that he's validated the fact that, hey, this thing, you will work as support and resistance in time. If you think about, normally you divide a square or divide a range into price increments, but you can do the same thing with time and say 144 trading days down from high is a Gann cycle. I'm looking for a low, and sure enough, it gave you a low.
Yeah.
And then you did another 144 into a higher low. And I was expecting, goes to show you, as soon as it's, you think it's going to work, when you do the trade, it doesn't.
Yeah. I noticed there you've got 45 is an important Gann number too, isn't it? Or
yeah, 45. You could be 45 calendar days, 45 trading days, 45 solar degrees.
Yeah. The other thing as well is, like, if you add 4 and 5, you get 9. And 9, I think, is also an important number for Tesla. I think he calls it the frequency, something to do with frequency. I don't know if you've looked into that.
Well, there's he actually took some of his inspiration from musical scales.
Yeah.
As well as, he thought there was a kind of music to the charts.
I see.
And he also looked at, I can't say that he didn't look at that. He looked at pretty much everything under the sun and in the solar system. He's basically looked at everything.
Yeah.
I don't know of any human being today that would spend that much time, trying to figure out methodologies. And it wasn't just one. When you say Gann analysis, it's kind of a misnomer, because it's like a big tent, right? There's some people do Gann, they only do the square of 9.
Yeah.
And some people only do the Gann divisions, and some people just do the cycles.
Yeah.
I think that's doing an injustice to Gann, because you really have to do most everything he did in order to appreciate how he was able to trade and make 90% of his trades winning trades. It's just amazing that he could do that. And like I said, I'm not Gann, so I can't necessarily replicate what he did. But like in this case, I thought it was bottoming. But it's always a probability, any trade you take. And so in this case, note I'm using the Fibonacci 38.2% retracement at 1845, and then we had the 3/8 retracement, which is a Gann thing, at 1849. So right in there, you would be looking for support. So
yeah, and I see that right now. For example, we were at 1869, and the low today was 1850, and the high is 1878.
Right.
Yeah, I don't know if that's an important number, 78.
It could be. It doesn't pop into my head right now.
Yeah.
But if you were to take one of these lows and do the square of 9 levels, you might come up with that.
Yeah.
It just depends on how much time do you want to spend on it. That's the tricky bit. People ask me, can you do this on an hourly time frame? Yeah. You can do it all the way down to 5-minute charts, but how much time do you want to spend on it? You know,
Yeah.
I mean,
It's amazing that Gann did this and with no computers or spreadsheets. He must have spent a lot of time uh, yeah,
I don't,
crunching the numbers.
he did. And I guess, you know, he was gifted in mathematics, and he was able to, you know, to see this stuff. And I think the beauty of Gann, if you think about Jesse Livermore,
Yeah.
he's reputed to be the best trader who ever lived. He blew out a couple of times, but the one rumor was that Gann actually bailed him out one of those times. Now, what those two guys had in common is they both had photographic memory. You know, they could look at something and they would remember it.
Yeah, I think Livermore also saw patterns in numbers as well, and he was really good at maths.
He was, and I read that he had a big blackboard, and he paid these young kids to just write numbers and erase it when the price changed, and he would just look at it, and he would be able to assimilate the information just on, you know, you couldn't do that unless you had a photographic memory. And so that was amazing that he could do that, but very few of us can do that. So that's why I like Gann, because you don't have to memorize it. You can see visually on the charts the key numbers as it's expressed, you know, in these cycles or in the Gann retracements. Whereas I think Jesse Livermore just sort of did it internally. He just,
he just did it. He was intuitive, wasn't it?
Yeah, it was, you know, and I think it was more than intuitive. He was like a human computer. He basically, he knew, oh, on, you know, March 6th, you know, 1910, this stock, Ford or whatever, it hit this level, and I'm going to buy it because I know that's important support. And who else can do that? You know, I mean, you'd have to have that kind of mind. But, you know, the difference with Gann, he left a legacy that, you know, if you pick it up, you can sort of, you can go quite a ways without having a photographic memory. Of course, computers are great. Honestly, I will tell you the truth. If we're still doing this on paper, I don't think I would have the patience for Gann. You know, I know that's old timers are like saying, oh, you know, you got to do it on paper. You have to feel it, you know, and go, well, no, I don't.
Yeah. The point and figure charts there. I remember when I started in the business, there used to be some guys who used to keep it every day. Like, well, not every day. They change, you know, they had it on a graph paper, and they used to fill the circle or the cross. Yeah.
Well, I think there is something to be said for when you write stuff down, it affects your memory, it imprints, so it's easier for you to remember because you wrote it, you know. So I think there's something to be said for that.
It's like when you read a book and the story, you remember more, I think, than when you watch a movie.
Right, you do.
Yeah.
And I think there's something to it. I'm not saying it's wrong. I'm just saying, I wouldn't have the patience for it.
Yeah.
Yeah. So, and if you're looking at a lot of markets, it makes it really tough because I'm doing Forex, stocks, bonds. I even do crypto. And
I see.
So whatever people are interested in, I kind of tick all the boxes.
Could we quickly have a look at silver? I don't know if you look at silver.
Sure. It takes a few seconds to load.
That's all right.
The thing is, I got 200 charts here, so it loads kind of slow, but you know, it's okay.
There. 100. Yeah. So can you imagine if Gann had access to
he would be dangerous.
Yeah.
You know, they'd have to ban him from trading. You know, like, no, that's not right. You can't do that.
He'd take over the world.
Well, you know what I was thinking about the other day is, given his knowledge of cycles, do you know how dangerous he would be in the options market?
Yeah.
He would be killing it.
Any market, basically, I guess.
Any market, you know, if
Yeah.
a guy like that, it'd be hard to stop him. You'd have to outlaw him somehow. But here's the same concept, square of the range. Now, if you remember what I said about knowing the scale,
Yeah.
price unit is 0.25. And since we're looking at a monthly chart, it would be moving up at a rate of this line drawn up from low at the time of this low here
Yeah.
is moving up at a rate of 25 cents per month.
I see.
So, and then where it crosses the level of that former high, that completes the square in time.
Okay.
And this square on top of a square is just a way of projecting, you know, where you think it's going to go. I have, you notice I put circles on here. June, if we don't take off before then, I think by June, it will start moving up. And I put in these arrows just to give a feel for what I think it might do. You know, it could be different, but, you know, this is what I think may happen. We take off in maybe late May, early June, and we go up we get to almost $60, and then we fall back, find support on the former high at 48.
Yeah.
And then we go higher into February 2026. So this is a long-term chart, but it gives you a flavor for what I think, you know, 93 is a price projection. It's pretty close to 90. And for Gann, 90 was a big level, both time and price. And notice 90 bars would be 90 months.
Yeah.
So from that low, it did 89 months from this high to low, and then 90 months into high, February 2026. If your viewers are watching, they could, if they had a calendar that went out that far, they could circle that.
I see.
Tell me I'm wrong. This is not etched in stone. I could be wrong. I might not be bullish enough, or maybe, you know, maybe it's one of these other levels. But
so I guess it would be maybe a good time to take some profit.
Oh, in February 2026, if you got to 93, yeah, I would definitely take profit, because that's
yeah. And I guess some people see it even higher than 93, but that's a different story.
That's why I tell people I'm not saying you could do 3 boxes, right?
Yeah.
This is just 1 box.
Yeah, that's
okay.
Right.
1, 2, you could do the 3rd box up and say, well, we have price targets all the way up.
Yeah.
Right.
Why do you think silver has had a relatively tougher time compared to gold, for example?
I think it's probably related to the fact that it's a reflation trade. And when we start to realize the Fed is not going to reduce the balance sheet, even though they say they are.
Yeah.
And it takes time for people to accept it.
Yeah.
Because they listen to this guy. And I swear, if you think of Greenspan or Yellen or Bernanke, nobody sounds as good as Jay Powell. He sounds the best. I mean, he sounds like an authority figure to me. He sounds like when he speaks, it's like you're expecting the clouds to part or something. You know, he has a sense of authority, and I think people respect that. He's not overstated. He's usually understated. And so if he says that they're going to reduce the balance sheet, I think they believe him. I don't believe him at all. But
well, he tried it. He tried it before, like in 2015 to 2018, and then he had to reverse it.
Yeah, he may try it occasionally, and then he'll reverse gears when he sees that, oh my God, the S&P's down 50%. I can't be doing this.
Yeah. Just a question out of interest. Do you also stack gold and silver aside from trading it?
Do I also
stack, do you buy physical gold and silver as well?
A little bit, I've been trading options because I'm expecting a huge move.
Yeah.
And what I tell clients, if you're going to trade options, don't get greedy,
Yeah.
buy plenty of time value, 1 to
Yeah.
2 years,
Yeah. I
and
like options too, because when you're buying a call or a put, you know how much you can lose.
yeah, you don't have to sit there and watch it every day.
That's right. Do you
As
do
long as you have plenty of time
COMEX
value.
options, or
What's that?
do you do the options on COMEX or options on ETFs, or?
I do an ETF, like I'm more interested in silver than gold. So I've been doing
Yeah.
SLV.
I see.
And my thinking is that if it goes where I think it's going to go, it's going to be a huge trade. As long as you have plenty of time value, when you get close to expiration, you can be wrong about, for example, here, I really thought we'd be well above here by now, but if you don't have the time value, then your options expire worthless in here.
That's right. Yeah.
That's not going to be good, but you need at least a year or two if you're going to trade options.
Yes.
It costs you more. You don't make quite as much money, but I think it's like insurance.
Yeah.
Because I think this is working. You got a low here, a low here. This should probably be, originally I thought this might be a high of some sort, or
yeah, that's the seasonal pattern there, isn't it?
There's a seasonal pattern.
Yeah.
And, there's also the square. This is kind of a natural square.
Yeah.
And you can see here, September.
Yeah.
That's, you think
a
about
quarter of the square and then half the square.
Yeah. Half the square would be September 2018. Yeah. And even though you got slightly lower here, I consider this the bottom for this big sell-off, and that we were really, you got this head fake
because
move down.
That March 2020 low, I mean, that lasted hours. I remember the day that happened. So it's almost like you'd say a double bottom there to that September 18 low.
Yeah, in fact, that's probably the better way to look at it, double bottom.
Yeah.
And then you start inching higher. And then once you get above, say, I don't know, 29.90, this high here, that will validate that, hey, this cycle, 3/4 of the way through the square is calling the start of a big move up.
And I guess you want to see the market move above to this square here, right?
Which
that one there instead of the one below that.
Oh yeah, you don't want it going down here, but if you get above this square, 26.33.
Yeah.
Now, we're looking at the May contract. I probably should be switching this to something July or whatever.
Yeah.
But it works the same way. You just have to change the contract. And that does bring up another point. The Gantt style continuation is different than a normal continuation chart.
Yeah.
You connect in this case, the May contract to the expired May contract.
I see.
And then all the way back.
Okay.
Now, the reason Gann said he did it that way is because he felt that each contract was like a separate animal and you wanted to treat it separately. Now, I look at it both ways. I find, sometimes it looks, you get insights from both ways, but that's the way he did it. And so that's what this chart is doing. This is using not intraday. It's not updating real time. It's end of day data.
Okay.
So, some of my charts I use real time data, and it's not by definition. This data vendor that I use, this is only end of day. If you do it the Gann style way. So, but it's useful in the case knowing that, May, June, you should be expecting some sort of turn in silver. So.
All right. James, it was great speaking with you and learning more about Gann and realizing that there's so much to it. And maybe you can tell the viewers how they can find you and the deal that we're going to give them.
Yeah, if they send me an email to jamessmith.gannanalysis@gmail.com. Now I made these capital, it doesn't have to be, it's not case sensitive, but
Yeah,
you just type jamessmith.gannanalysis@gmail.com. Tell me you watched this podcast, you want a 2-week free trial, and we'll set you up by email. I'll add your name to my distribution list, and you'll get, all the reports that I normally do for 2 weeks. And that would include, stocks, bonds, Forex, commodities, crypto. And, you get a flavor for it. In 2 weeks, you'll know whether you like it or not.
great. James, I actually look forward to speaking with you again to see how the markets evolve. I think tomorrow will be an interesting day, I guess, not just in terms of the Fed, but maybe the cycles and the seasonality. And yeah, thanks again for being on the channel, and all the best.
All right. Thanks a lot, Mary. I appreciate your having me on. This is great.
You're welcome.